Can crypto collapse a currency? Can a cryptocurrency like Bitcoin collapse a fiat currency? And for that matter, can the government behind fiat currency collapse crypto? We'll explore all these premises and more in our next episode of Finance in 5 Cryptocurrency. Now, capitalism is the exchange of goods and services. And the underlying base is what is used as a foundation for establishing value. So look at my background. Some societies use seashells or tulips, and others use precious metals like gold and silver. But in today's modern society, we primarily use paper money, also known as fiat currency. So let's start the clock for the next 5 minutes as we explain the differences between fiat currency and cryptocurrency. Then in the extended version, we'll explore possible outcomes for crypto and government money as we analyze and share our opinions on these exciting subjects. Let's start with fiat paper currency. Fiat means decree by authority, and it applies to currency in the full faith and backing by the government making the decree. First invented by China, and later mastered by the Italians, the Dutch, today the USA, and ironically again today with the Chinese. They're one. Before paper currency, humans liked coins, made from shiny stuff like silver and gold. Now, in the middle days of currencies, humans found ways of cheating. It could be clipping of a coin where a tiny fragment would be snipped off and collected. You take 1% off each coin and over 100 coins later, well, you have a whole new coin in thievery profits. Other thievery was the government stamping the coins, would put less weight in each coin or mix it with other lower cost metals. This deception is called debasing, as you're taking the value away from the base, in this case, some form of precious metal. Since 100 bars of gold are hard to carry, paper currency made sense. But can you imagine that very first trader conversation? What? You want all my gold for a single piece of paper with your emperor's image? Well, everyone is doing it. It's the hottest thing going on the Silk Road. You're going to miss out. All of a sudden, that trader's eyes grew wide and the fear of missing out hit him like a ton of bricks. Or in this case, gold ones. Up until 1971, the USA currency was backed by gold, known as the gold standard era, because many other countries did the exact same. Thankfully, paper currency is foolproof and no cheating exists. See what I did there? Wait for you to stop laughing at your screen. Of course cheating exists. Countries where the penalty is death, people still found ways of cheating. Thankfully, governments don't cheat. Okay, not the same long pause, but we get it. Humans cheat. Germany tried to collapse England's economy in World War II by forging billions of pounds of fake currency and placing it into the global economies, including England. An economic weapon made from pulp and ink. Governments have their own finger in the pot for thievery when they turn on the printing press and issue new currency in the marketplace. Same ink and paper, only this is legal because it's signed by decree of authorization. But it still devalues all the existing money previously issued, a different form of debasing. Expanding the balance sheet and debt is a separate economic topic in a different video. I highly recommend the website debtclock.org. They're not endorsing this video, I just like the way the information is presented, even though the numbers could be super scary at times. Now these twins, Winklevosses, took $1 million from their Facebook settlement profits, and they invested in Bitcoin back in 2013. They bet big on Bitcoin and other crypto early and are now reportedly worth, multi-billionaires. Their thesis was simple, and that cryptocurrency would rival gold one day in total valuation. Believe in a theory and bet big, and you could see your wealth grow exponentially. Of course, there is a side of loss if you bet wrong. Quick primer explaining cryptocurrency. Gold gets mined from the earth. Crypto gets mined from a computer. Just like gold, if it was easy to get, the valuation should be low because of the laws of supply and demand. And I think this concept is the backbone of almost every business's decision made by humans. It's so important, we made an educational video, aptly titled, Supply and Demand. Now, since crypto is intangible, it still needs to be based on something, as you can't just sell air. Or could you? Well, this is a crazy world we're living in right now. Crypto's underlying base is a beautiful technology process called blockchain. And blockchain is a process. You notice I didn't say algorithm? Because it's much more than just a mathematical formula. It also relies on a series of checks and balances for verification and authentication. Issuers add extra digital features and create a token, which typically represents a single unit. Now this token has value in its uniqueness. For Bitcoin, its rarity is in the genius of the original founders' design, their structure of increasing the difficulty to digitally create each new Bitcoin and set a predetermined limit of total Bitcoins that can eventually be mined. It's really brilliant. Incremental difficulty and rarity, limitation or finite number of coins that can be mined should make each coin owned more valuable. Blockchain technology is also revolutionizing the art and collectible world with NFT, non-fungible tokens, which we'll cover in another video. Back to Bitcoin. It's not the only cryptocurrency, or ICOs. An ICO, is an initial coin offering, and anybody can launch an ICO. All you need is the digital process for your token and someone to believe in whatever you're trying to sell. The process is so easy, some technology people created Dogecoin as a goof, using the Shiba Inu as their mascot. And today, that ICO is worth billions. Highly profitable joke for the originators. There have been hundreds, thousands of ICOs created in recent years, and the only single thing that they have exactly in common, they all need to be accepted as worth something by buyers and sellers. In a marketplace, no success. I'm going to toss this conversation to my partner, Adam Myers, who will identify the 8 traits that are found in a currency. Adam?
Thanks, Ian. Let's jump right in. To be recognized as money, a commodity or currency must meet certain criteria. First, it must be durable, which means it has to withstand repeated usage without degrading quickly. Cryptocurrency passes this test. Next, it must be fungible. That means individual units are interchangeable and distinguishable from each other. Gold is fungible because a specific amount of pure gold is equivalent in value to the same amount of pure gold. Diamonds are not fungible because of the different grades and cuts, colors, and sizes. Cryptocurrency does pass this test. Currency should be divisible. Breaking 100 into 250s or 520s should be exactly the same as before. If we use the diamond example from before and it drops from our hands and breaks, the pieces can't be put back together to create the same value as before. Cryptocurrency, however, would pass this test. Currency must also be recognizable. Users must be able to agree on quantities and authenticity. Cryptocurrency does pass this test. Currency must be portable. It must be convenient to transport from one place to another to transact at retail stores. Cryptocurrency does pass this test. Currency should be malleable. Traditionally, coins could be beaten, melted, or printed and given convenient shapes like a coin or a bill. Obviously, a digital currency does not have physical properties that can be shaped. However, if we think about the difference between fiat currency and, say, Bitcoin within the malleability of a transaction, we see some problems. For example, handing someone $1 makes sense, but exchanging private keys and public keys, which are essential in a cryptocurrency transaction, it can get a little confusing. While this is being worked on, cryptocurrency has not solved this issue yet. Currency should be generally accepted. I should be able to pay my taxes, my housekeeper, and buy a steak using the same medium. While the institutions accepting cryptocurrency are increasing, it is still not generally accepted. Cryptocurrency fails this test. Last, currency must be stable. Trading currency for goods or services should maintain a relatively consistent value. Cryptocurrency fails this test miserably. In January of 2017, the exchange rate for Bitcoin was about $988. In January of 2018, it was $13,694. On April 14, 2021, we saw the value skyrocket to $64,899. Nothing stable about it. While cryptocurrency can be used as money with PayPal and Square and Tesla and Visa, the instability of the value creates a nightmare for fair trade, and no digital wallet is hack-proof or theft-proof. If your crypto is stolen, there's no recourse. No insurance company wants to protect this currency because of the risk. The US dollar is the most successful of the fiat currencies used throughout the world. The Federal Reserve is desperately trying to maintain the dollar hegemony, though it does have a high likelihood of failure if history is any indication. So this build-up period for crypto could be its rise to dominance in the event of the collapse of the dollar. However, Given crypto's decentralized and unregulated nature, it's unlikely governments will adopt it as a reserve currency. There's no way to manipulate it or create credit. This may be why we hear Bitcoin is the default currency for criminals and drug dealers. And looking beyond the unlikely government adoption, there are other threats as well. Google recently released a quantum computer. Within a few evolutions of the processor, we could be seeing 256-bit encryption being hacked. Imagine that technology in the hands of hackers. Blockchain will be in serious trouble. Ian, I'm sending it back to you.
Thanks, Adam. The very basics of capitalism is not political, but the exchange of goods and services, and the valuations you assign to each. Now, why is a single painting worth more than 30 million man-hours? Because it's based on the last price sold. You can ask any price for anything. If someone says yes, then you have an exchange. And if more gather and do the same, you have a marketplace. You don't have a modern life without the exchange of goods and services. The key word there is modern, because if capitalism exists in your country today, then there's a high probability you live in an area without fear of the neighboring village coming to take your stuff. The Kardashians of Calabasas don't fear an invasion from Encino. So the value of stuff varies. And how we value items and service as humans has always existed, since the very first cave drawings. Today it might be the first edition Superman comics. Pokemon card, polished rocks, watches, art, or other items. Humans value different things. Always have, always will. The subject is so important we made an entire video series on valuations. Prime example, humans love and valuation of shiny metals like gold and silver. Because, why not? It's shiny. This coin I'm holding is a Bitcoin. See what I did there? I gave enough time for viewers who know cryptocurrency to scream at the screen. Because crypto is not tangible in the form of gold or anything other than digital. So how can crypto lead to the collapse of a currency? Well, if enough people no longer believe in the currency of their government, they will look for alternative forms. This is one reason why the black market exists, to circumvent the government. Now China, they've had a huge problem for years with shadow banking. Some traders in Latin American countries won't accept their own country's currency for trade because they rely instead on the US dollar or other stable currency. If world governments keep printing money, that at some point buyers and sellers of goods and services might not want to own paper or fiat currency of one or more governments. It is highly plausible that at some point in the future, fiat is bypassed for crypto. And if we all become global citizens, why use a central government currency? Okay, why invest in Bitcoin today? Yesterday or tomorrow? The only reasons why is because you believe, and if enough humans believe in anything, then you have a movement. And if that movement stays, then you have a new way of doing something. And after enough years pass, then the people will barely remember the old ways of doing something. Hello, 8-track tapes. Some people who buy crypto are speculators, momentum traders, fear of missing out, FOMO. While others completely believe in the premise that crypto is here to stay as an alternative to gold and government fiat currencies. So, with this backdrop of valuations, currencies, and chaos, you can easily see the valuations of certain items of limited supplies being driven higher. We're seeing it today. Ferraris, 10-carat diamond rings, Pokemon cards like I said before, Bitcoin, etc. Governments have and always will continue to monitor and regulate cryptocurrency. This is my strong opinion, as I believe they don't want to see the old ways of doing business radically shift. How do you stop the tide if enough people want something? Isn't that the real question? The basis for revolution? And if enough people revolt against your currency and its valuation methods, can an alternate method be the replacement? Can a digital token that has no country boundaries be regulated into oblivion? Well, when the first hard drives were created for computers, there were hundreds of manufacturers. And today, there's really less than 5 that control most of the world's supply. Maybe 5 different cryptocurrencies survive and dominate in the future. Just like today, there are only a few true large players for internet search engines. With their intangibility, crypto values should fluctuate greatly. Some in the fringe movement of crypto suggest a future economic zombie apocalypse, which would make their currency stronger. I would suggest, under the collapse of fiat currency, that most humans will value a case of beans and a good weapon more than their digital wallets could ever carry. no matter how many zeros were on a ledger and bank statement. Recently, CNBC Andrew Rothschild interviewed economist Nassim Taleb, the famed author of Black Swan events, which are unplanned or highly unexpected moments of change. It's a great interview worth watching, but I completely agree with Mr. Taleb's assessment that crypto is not a currency right now and trades more like an equity. I also agree with his assessment that cryptocurrency acts and behaves more like a Ponzi scheme. Now, I know that's going to create a lot of feedback, but I'm reminded of a form of mass gambling I witnessed in the 1980s called the pyramid scheme, a classic Ponzi scheme that relied on new investors paying off old ones. A letter would read, "Put $100 into this pyramid and work your way to the top with a $20,000 payday." As you can imagine, early investors cashed out big and later investors lost it all. Some winners reinvested into new pyramids while others bought a new car or something with tangibility. 3 things were for sure. 1, everywhere you went, people were talking about pyramid riches, and fear of missing out was dialed into 100 on the scale. 2, the US government was not getting any tax revenue from this gambling, nor do they like scams on their citizens. Unless they're the ones doing the scamming. 3, when it was all over and a few years passed, people jokingly referred to the mania and their participation, while others cried having lost their life savings to speculation. The Japanese government, where the pyramid scheme started, banned them from being used, and the US government soon followed, and today they might still exist, but not on the scale they once held with speculators and gamblers. So governments can shut down schemes, and what would prevent them from shutting down cryptocurrency use? Everyone is a citizen of some country, and if that country bans crypto, their use, then someone might fear jail time as a criminal. And getting caught is harder with crypto, but a government ban would surely crimp its widespread usage. Now, before we wrap up, let's turn it back over to Adam Myers. We'll share some stories of theft and loss in the world of crypto exchanges and why this investment area is more like, let's call it the early days of the Wild Wild West, and less likely like the early days of the internet.
Thanks, Ian. Let's get into some issues with cryptocurrency in the past. In 2019, the CEO of the Canadian exchange Quadriga died, leaving the company scrambling to figure out how to access the $145 million of cryptocurrency held by the company. Many of the cryptocurrencies held by the Quadriga exchange were in cold wallets and offline storage designed to keep it safe from hackers. Quadriga's CEO, Gerald Cotton, was the only one with the passwords to these wallets. When he passed away at the age of 30 from complications from Crohn's disease, the company tried everything to recover the passwords, including hiring hackers to gain access to Cotton's laptop. Because of the size of the theft, they had to be granted creditor protection in the Nova Scotia Supreme Court. Another example, in 2018, South Korea's CoinRail announced it had been targeted by cyber thieves, and that breach resulted in about 30% of its cryptocurrency being stolen. The exchange did not disclose the dollar amount being stolen. But this caused the crypto market to plummet, with approximately $30 billion in cryptocurrency to be wiped out in 7 hours of trading. Anyone who has followed cryptocurrency or financials in general have heard of the failure of Mt. Gox. Mt. Gox was a Bitcoin exchange based in Tokyo, and at its peak was handling nearly 70% of the Bitcoin transactions worldwide. Its short life started in 2010 and ended in liquidation by 2014. Those 4 years were a tumultuous time for the exchange, with the absolute lack of security protocols allowing for thieves to run away with about $450 million worth of Bitcoin. None of these compare to the $530 million crypto heist that happened in January of 2018. Coincheck, the self-described leading Bitcoin and cryptocurrency exchange in Asia, was the victim of yet another cyber heist. Coincheck apologized profusely after the theft and promised to partially refund the 260,000 cryptocurrency investors, but had to use its own funds to do so. And the company was only able to cover about 80% of those losses to those investors. And there are dozens more examples. In 2017, South Korean Bitcoin exchange Ubit filed for bankruptcy after being hacked twice by cybercriminals. Also in 2017, NiceHash, a Slovenian digital currency trading platform, was robbed of $70 million worth of Bitcoin. When leaving cryptocurrency assets on exchanges where you do not frequently trade, you do so at your own peril and risk. A crypto exchange is not a bank, which by nature is interested in the security of your assets and alerts you about any danger that has arisen as soon as possible. Unlike banks, exchanges will not spend huge amounts of resources on such efforts. Some of the best options are to set up hot or cold wallets. Hot wallets being connected to the internet do face the potential of being hacked, but also have the convenience of being used to facilitate basic transactions. Just ensure you set a good private key, save your seed phrase, and set up two-factor authentication. And keep that information written in a safe place so that your loved ones can access it in the event of a worst-case scenario. I'm sending it back to you, Ian.
Adam and I, we don't know what will happen tomorrow in the world of cryptocurrency. As financial leaders like Elon Musk, Mark Cuban talk about their legitimacy. Even famed Wall Street investor Bill Miller, who was Morningstar's manager of the decade, says Bitcoin is a lot like digital gold. And time will tell. And those who got in early, well, they'll probably laugh at those who ignored the signs and did not participate if crypto proves successful. And if it fails and flames out, then it'll be just yet another experiment in what humans value. And that is how I want to end my thoughts on crypto, in that I don't know if this is a mania or a revolution. But if it's an economic reality, then government control of currency and its role in capitalism has begun its collapse, and humans will be changing how we value and exchange goods and services. Well, that's until the next new thing comes out, future video for quantum computers' role in capitalism. See you soon. This has been Ian Goldie and Adam Myers for Finance in 5 Cryptocurrency.